What's up, everyone? Let's go on a little walk and talk. So this week was my first red week of the year. Quite an accomplishment to have gone this far, about 7 full months of every week making money. However, this week I really noticed that the market shifted. Everything shifted, and the market starting to pull back a little bit. And of course, you guys are probably seeing news articles in the media calling for a potential recession or potential hard landing. So yeah, I could definitely tell, the market is shifting. You can take a look at market indicators that potentially indicate recession, such as the Buffett indicator, the SOM rule, and of course, the infamous yield curve. And yeah, all of those indicators are definitely signaling potential recession in the near future. So I'm definitely prepared for a period of slowed momentum, slowed volatility, and small caps. Maybe now is a good time to start fiddling around or maybe experimenting with different types of strategies. Maybe developing a different strategy that will perform well. Maybe something regarding large caps or trading the overall market. But this week could definitely be a foreshadow of the limited amount of opportunity and volatility that we may see until the market starts to turn around. So if that was the high in the overall market, and we're just going to be stair-stepping down from here until an eventual kind of rug pull into a crash or a recession. I don't expect the volatility to really come back until the market starts to turn after they drop rates. But usually historically, after the Fed drops interest rates, there is an initial panic in the markets. If you do take a look at historical data. So I guess for longer term investors or like a retirement plan, definitely would be a good idea to start dollar cost averaging, especially for people like me who are young and have another 30 years, 25 years of growth in their retirement account until they turn 59 to cash out in their IRA. So if you're young like me, it could be a good time to start DCAing on the backside of the market slowly over time, so you can reap the rewards. But this week was my first red week of the year. It was great that I had a nice solid stretch of profits are coming in every single week. Prior to this year, let's say like the first year or 2 years of learning how to trade, a red week would completely spiral me into a full-blown questioning my existence and what the heck I'm doing, because I didn't have any track record of success. So I felt like every single red week, every single red day, every single red trade was a sign that I truly actually didn't know what I was doing. But now after 4 years of profitable trading, I definitely have a proven profitable strategy. And so these red weeks, they're going to happen to every trader. But because I have that 4 years of profitability behind me, it boosts my confidence in myself and my self-assurance that it'll eventually turn around and I'll be back to making money. And the best strategy to implement during these kind of times that are more uncertain, the opportunities are less, the volatility is less, the correct mindset and strategy to deploy is preserving your capital, trying to survive to another day. Because if you continually try to deny that the market is not giving you the same opportunity and you keep pushing even though the setups are not working the same way, you're going to find that you're going to be losing a lot more money than you're used to, and the winners that you are getting are not going to be able to offset those losers, whether through risk to reward is no longer what you were used to, or the accuracy is lower than what you're used to. So what I find, if you're going to stick with small caps and kind of just ride through the cold market, which always eventually turns around no matter how long. I've had, cold markets go for a couple months, and that was the time I actually had to go back to work. The cold market was just so bad, and I wasn't making any money. I wasn't losing money, but I wasn't making a lot. I actually had to go back to work. But what was I saying? Yeah, if you're gonna try to ride out this market, this colder market, it's best to just live the trade another day. Maybe try to, at best, get some small green. But as far as taking massive amounts of risk, maybe dialing back a little bit, just trying to survive. Maybe that being your goal. Another thing you could do for more experienced traders who are already kind of mastered a profitable strategy, or have got profitable in small caps. What you can do is try to trade a different strategy, maybe longer hold times on large caps, or the overall market, or trading options. So there's so many different strategies out there, and for those people who are already are profitable in small caps, it could be a good kind of time to kind of take your time and your energy and put that towards developing a new strategy, so that in the future, when the market does heat back up, maybe you go back to small caps, but when it eventually cools back off, like it always does, it always goes through cycles, you'll have another strategy to kind of pick up the time periods or the days where you're not really seeing as much opportunity in small caps, and you can maybe capitalize on a different strategy to at least be able to make some money in large caps, or whatever you decide to do, options, if you're not making money in small caps. But yeah, I do think that the volatility and the overall volume in small caps is going to be a lot lower for the short-term future. I don't think this week is going to be the end of this colder market. I think this is a foreshadow of what we're going to see coming into the election, and hopefully once the solution, whether that be a bigger correction in the market and an eventual drop of rates, which is probably going to happen, once we come out the other end of that, then that's when I think the small caps are going to be really, really fired up, like massive amounts of volume, massive amounts of volatility, and back to really, really pushing it, like we would see in 2021 and 2022. So it's just normal to go through these cycles, but it's important, if you're a new trader right now, and you find yourself after this week that you're more confused about what you're doing, and more not unconfident in your capabilities of being a trader. That's completely normal, and in fact, that's a good thing, because when you do feel that, that means that the market is shifting and you're noticing a change in the market. It's not a direct reflection on your capabilities to make money as a trader, as taking the right entries, but it is a reflection of your risk management. If you're able to follow your max loss rules, this is where, in this market, this is where it separates the people who have good risk management and don't have any risk management. So what you'll find is, there's a lot of traders, I've noticed this throughout my 4 years of trading, is that some people are they can make a crap ton of money in 2020, 2021, but when the market slowed down in 2022 and 2023, these traders blew up, because when the market slowed down, they didn't have any risk management. So yeah, they could make money in that market, in a strong bull market, But when the market eventually turns, which it always does, you know, they're caught, you know, how some investors like to say, they're caught swimming naked. The tide goes out, there's no more opportunity, and they're the ones taking massive losses because they can't follow the risk management. So, you know, if you're a new trader, this is a test of your capabilities of being able to keep your losses small, keep that tuition small if you're learning, and just trying to survive to the next day. That's really the mindset and the goal of a new trader, which is every single day just trying to survive to the next day. So that's why, you know, not taking massive size when you first begin is so important, because you don't know what you're doing. And unless you have a proven track record of many, many months, there's no reason to be putting on such insane amounts of risk, or, you know, risking more money than you're willing to lose in any particular day. So that's why, if you're new, no matter if the market is hot or cold, I always advocate for the mindset of just trying to survive to the next day. Survive to the next day, survive to the next day, and do that for months and months, maybe a year, maybe 2 years. Because the idea is not making money, is not trying to maximize the amount of money that you can make, because you don't have the skills. You don't have the skills yet. You're trying to build those skills. So that's why, trying to survive to the next day, you'll be able to be in the game long enough to have those skills catch up and then start making money. So you build these skills and you can hone those, and eventually you'll recognize that now I'm actually holding on to some gains at the end of the month or at the end of the week. And over the course of 6 months, maybe you have 6 months in a row where you're green. That starts to be signs that, okay, maybe now I'm starting to have the skills that are necessary to start making money. And that's when you can start focusing on increasing your share size, increasing your risk, because you have that proven profitable system. But in the beginning, if you don't have any of that, there's no track record, there's no history. That's why, you know, surviving to the next day works, because you'll be able to stay in the game long enough to eventually build those skills. So yeah, even after this red week, I'm not too worried. My mindset is I'm pretty stable, you know, not, you know, questioning my abilities to trade in the markets, you know, not getting depressed, not getting down on myself. Yeah, it's quite unfortunate. Pretty much this week was, I didn't make any progress as far as P&L wise, but at least I can exercise some discipline, can follow my rules, follow my max loss, not trade beyond my max loss, which is all very important for long-term success. So I can exercise that, and that keeps it strong. And you know, I'm confident that, you know, at this point in my career, you know, four years in, I'm confident that I have built my skills to where in the long term, it's going to continually pay dividends. It's going to continually to pay me until I ever stop trading, which I don't see myself at any point in the foreseeable future that I will ever stop trading. So, you know, 1 week in the span of my entire career is nothing. I won't even remember this likely in a month from now. So it's also good to keep that perspective, especially when you're going through a rough patch in trading. You know, one day, it's another thing. That's why I say, like, 1 day, 1 week, 1 month can never define your results and your capabilities and your identity as a trader, because it's such a small data point. But yeah, it's easy to get lost in the moment, you know, after like one bad trade or one bad day, one bad week, or even one bad month, to have that define yourself. And of course, that's just you whatever the saying is, mistaking the forest for the trees, too fixated on the details and not the bigger picture. And yeah, it's important not to get fixated on any one particular day, because if you're following your max loss rules, never one trade, never one day, never one month will ever even impact your entire trading career. It shouldn't, because if it does, then you probably won't be in the game forever. Eventually, that sort of high risk will catch up to you if you're trying to have one trade define your entire career, or one day define your entire career. Because the idea is to stay in the game long term. It's longevity. But yeah, so I thought I'd just come out here and on this beautiful day and give a little walk and talk about my worst week of my entire year. This is the worst week of my entire year. A red week. I lost money. 5 days. Actually, I was red on Monday, green on Tuesday, green on Wednesday. Heck, I think I was even green on Thursday, and then Friday, red again. So, and Monday was a bigger red day. Not like anything astronomical. It's still an average green day, which is my rule. I never like to lose more than one average green day, because that obviously, keeps me in the game long term. It keeps that mindset of never having one day define my career, and always living to the next day, because we're always going to get better. And time is on our side in trading. You have to remember that. Time is on your side. Every single day that passes by and that you're still trading, you're another day better. So even if you're sucking right now, just try to get to the next day, because you're only going to get better. It's impossible to trade every single day for an entire year, for 2 years, for 3 years, for 5 years, for 10 years, and not get better. The only way to not get better is to either blow up your account or quit, or I think those are the only two options. I thought I'd come out here and just share a little bit of a trading talk with you guys. Hopefully you guys enjoyed it. If you did, let me know in the comments about how your trading is going so far. How'd you do this week? How you doing on the month? Tell me the truth. I'm here being raw and authentic with you guys. The ups and the downs, I'm not hiding anything. Everything is real. It's easy to come on the camera after you had a big 1K, 2K, 3K, 10K, 15K, 20K, $1 million year. It's easy to come onto the camera. It's easy to come on the camera when you're making money. But can you get on the camera when you're absolutely sucking? That's the real traders, when they get on the camera and they're sucking, and they're willing to tell the world that they're sucking. This week, my performance was good, but the results were sucky. The performance was good because I managed my risk appropriately, not trading past max loss, always living to the next day, because time is on our side. So that's my little talk here today. Hope you guys enjoyed, and I'll catch you guys Monday. All right, peace.